Hi guys, let's move on to our next topic, which is D1.6.3 regarding the byproducts. So we already discussed what are byproducts and why they are not considered along with joint products and all that stuff. So if you see the definition and characteristics, byproducts are usually what they are emerging from the manufacturing process alongside the primary products. They are not the primary products, but they have relatively low market value compared to the primary products. So the key factors distinguishing the byproducts from joint products are their smaller total sales value and less quantity. So usually the joint products are produced in bulk quantities and they have higher values, whereas the byproducts are produced in lower quantities and they have lower market price, right? So when we usually talk about the byproducts, the first and foremost thing to consider is, so are they produced at the split off point or do they need any further processing? So we know that there is a complete joint procedure, and at that split off point, the joint products and the byproducts are split out, right? So after split out, does the further processing is needed for the byproducts, or can they be directly sold in the market? So if they can be directly sold in the market, good. If they need further processing, we need to check whether is that worth it or not, first of all. So is the cost of further processing, is it, you know, is it going to give the company any benefit or not? That is what we need to check. So how do we check that? We need to calculate the net realizable value of the byproducts. What is net realizable value of byproducts? You take the selling price of the byproduct and then you subtract the additional processing cost and any selling cost. So for example, the byproduct, the extra product can be sold for, let's say, $20, but it will need a further processing of $5 and it also needs a selling cost of $5. So we are going to get an NRV of $10 per unit, which is a positive number, which is still good for the company. Like imagine if they have 10,000 units of this byproduct. So 10,000 into $10 per unit, they are going to make $100,000 by just selling out the byproducts, right? Sir, what if the sales price is $8 and the further processing is $5 and there is a selling cost of $4, for example? So you can sell for 8, but you need to incur a cost of 5 plus 4, 9. That means you are going to make a negative NRV. There is no point in spending $5 extra so that you can lose $1 money, right? So that is what you need to first check. What is that? If the NRV is 0 or if it is negative, that means you either are not getting any benefit or you are actually making a loss by further processing the byproduct. Then do not further process it, scrap it off. The byproduct should be discarded as scrap immediately, right? So this is the case when the cost of processing and selling, the further processing cost and the selling cost, are more than, or they do not even cover the revenue that you are going to get from it. So you are going to get lesser money than what you are going to spend. So do not do that. So scrap of the byproducts in that case. Next one. Sir, what if the NRV is positive? What if you are going to get some profit by further processing and selling the byproducts? In that case, what you need to do is check whether they are material or whether they are immaterial. Okay. So what do we mean by material and immaterial? Material means where the revenue that you are going to get is significant. Like you are going to get 5% of the total revenue of the company, or maybe more than that, something like that. There is no standard definition of what is significant. But if you are going to get significant amount of money by selling the byproducts, then they are material. If you are not going to get any significant value, then they are immaterial byproducts. So what should we do if they are material byproducts? Sir, name itself is clear na, they are material. So do not do any adjustments or anything like that. They are another source of revenue for your company. You are selling the byproducts and you are making money. So their NRV shall be capitalized into a separate inventory account. Sir, what does that mean? That means just like any co-products, just like the other joint products, the byproducts NRV also should be created as a separate inventory account, similar to joint products. Okay. So along with product A, product B, product C, joint A, joint B, like that only you will also have byproduct A, byproduct B, byproduct C, like that. So everything, all the joint cost will be allocated separately and everything will be done similar to how you do in the joint products. This approach is suitable when there is an NRV, realizable market for the byproducts. The entire estimated NRV of the byproducts generated during this period is recorded, means it is treated as a revenue. It is an extra source of money for the company. Okay, sir, what if they are immaterial? Like we are getting say $5,000 by selling the byproducts. Nothing crazy. Very simple. Just we are going to get extra $5,000. What should we do? Keep it simple. So you have two options. What are the two options? One is you can apply that to a main product and the other one is miscellaneous income. First, let's understand what do we mean by miscellaneous income. Just treat it as other income. You sold the byproducts and you got $5,000 NRV. In the other incomes, show it as miscellaneous income or sale of byproduct or whatever it is. Just show it directly in the P&L account as other income. They are generally not recognized until they are sold. Only after they are sold, you can recognize that. The proceeds from the sales are reported as miscellaneous revenue or as a reduction in the cost of goods sold. So either add it to the sales or cost of goods sold, you subtract that. Both will give you the same result. Now whether added to the cost or added to the revenue or subtracted from the cost, net result will be the same. That is one option, treating that as miscellaneous income. The second option, this is the key most important option, applied to the main product. Sir, what does that mean? Subtract the revenue from the byproducts from the joint cost minus revenue from byproduct, and then that amount, that difference amount only will be allocated to the common products, joint products. Like if you remember in the previous questions, we allocated this joint cost of 60,000 to the three products, right? So instead of 60, if suppose you get 5,000 from the byproduct sale, so 60 minus 5,000, 55,000, that only will be allocated to the joint products. Okay, so that way what will happen, total cost will come down by that 5,000. So your main product cost will come down because of selling the byproduct. Okay, so this is all summary, so I'll ignore that. Now look at the comprehensive problem. I think we'll do it directly here. I don't want to do it on a spreadsheet again because it's the same logic. So you can see there is a joint total processing cost of 60,000. So we have product A 500 kgs, product B 300 kgs and product C 200 kgs, and this is for illustrative purposes. Okay, this is a byproduct. Now please be careful. Byproduct C is 200 kgs. Now case 1, byproduct C, if it is material, what should we do? If it is material, it should be treated as a separate inventory account. It should be treated as a separate item. So if it is material, byproduct C, details are also given. Selling price is 800, additional processing cost is 300, selling costs are 100. This is given. So first checking the NRV of byproduct C. So sold for 800, further processing cost 300, selling cost 100. So 800 minus 300, 500, 500 minus 100, 400. 400 is your NRV, right? So NRV is 400. Now, since byproduct C is material, it is capitalized separately. What do we mean by capitalized separately, sir? See, using the physical unit method you can do. Total production is what? How many units did we produce? Since this is a separate item, this also should be added. So 500 plus 300, 800, 800 plus 200, 1000. Right? See. Where are we? Okay. So it is capitalized separately, right? So what we'll do is, joint cost is how much? Joint cost is 60,000. So this 60,000 will be first allocated to product A and product B, 500 and 300, 500 kgs and 300 kgs. So total 800 kgs. So the allocation will be 60,000 into 500 by 800. That would be whatever it is. And here 60,000 into 300 by 800. So that will be there. Then sir, what shall we do with this product C 200 kgs? What we'll do? NRV is 400 is there, right? So this 400 will be created as a separate revenue account. See, product A, product B, total, yeah, 60,000 into 500 by 800, 60,000 into 300 by 100, 37,500 and 22,500 will be allocated to individually product A and B, and product C is recorded separately with the NRV of 400. That is created as a separate revenue account. Like I mentioned, it will be treated as a, it will be capitalized as a separate revenue item. Okay. So again, if it is too big, if its NRV is also something similar to this, then it will automatically become a joint product, right? Next, sir, what if this byproduct C is immaterial? What if it is not so material? What should we do then? Okay, so you got what? Okay, another details are given. Selling price 300, additional processing costs are 100, and selling costs are 50. 300 minus 150. 150 is your NRV. So in this case, what should we do? If it is immaterial, you have two options. What are those? One is you can treat it as other income, or two, you can treat it as a reduction from the joint cost. See, first one, reducing the joint cost by NRV. What was our joint cost? 60,000. So 60,000 minus this NRV of 150 minus 150. So 59,850 will only be allocated to the products A and B. Like this, adjusted is 59,850. So 59,850 into 500 by 800, 59,850 into 300 by 800. Just making the correction so that all right. So that is 37,406 and 22,443. So the total will be 59,850. Okay. So revenue from sale of byproduct C 150 is recorded as miscellaneous income one if it is the second method. So for first method we reduced from joint product cost. In second method we will treat it as miscellaneous income. So here we will not subtract this from 60,000. So 37,500 and 22,500 usually will be there, and the remaining 150 NRV will be treated as miscellaneous income. Okay. See the summary here. If it is material, what we will do? So first, if it is material, NRV is 400, immaterial 150, 150. That is given. Oh, sorry, calculated. Now joint cost allocation, only 60,000 will be allocated. If it is immaterial and if it is treated as miscellaneous income, then 60,000 will be allocated. If it is reducing the joint cost, then 59,850 will be allocated. Product A 37,500, 22,500. And in case if it is immaterial treated as miscellaneous income, then 37,500, 22,500, there will not be any change here. But if it is subtracted from the joint cost, then 37,406, 22,443, there is no miscellaneous income in that case, because this 150 is subtracted from here. There is no more other income to be included, right? So that is about joint costs. So you can do one thing. What I would recommend you to do is, just take this activity, and what I would recommend you to do is, from the comprehensive question, if byproduct NRV is 5,000, calculate the costs allocated for all the joint products. That's it. You don't need to do anything more than that. So what you can do is just take a copy of this. I'll not leave it there. I'll delete that after this. So now all that you need to do is 60,000 is there, right? So here what you will do, 60,000 minus 5,000. So everywhere only 55,000 will be allocated. That's all. If it is material, then 60,000 will be allocated, 5,000 will be treated as a separate revenue account. If it is immaterial but treated as a miscellaneous income, then 60,000 is allocated, 5,000 is treated as other incomes. Okay. Otherwise, if it is subtracted, then this is the calculation. As simple as that, nothing more to worry about. Just subtracting that from the joint cost. Okay, I'll not keep that because that's just one step. You can do that by yourself. All right, so that is about the joint costs, and with that we complete D1.6. Okay, so I'll see you soon in the next lecture. Keep smiling. Take care. Bye bye.